one of the biggest Chinese chip makers, is delisting from the New York Stock Exchange. The company said the decision is not related to the heightened tensions between the U.S. and China. Semiconductor Manufacturing International, a Shanghai-based component manufacturer worth nearly $5.5 billion, said it will apply for the voluntary delisting of its American depositary shares or those that trade on a U.S. exchange. The last day of trading is set for mid-June. John Terrett has more details from the New York Stock Exchange.
This story was first reported by the South China Morning Post newspaper and website and has now been picked up by CNBC, the business television station here. It concerns the biggest manufacturer of microchips in China, the Shanghai-based Semiconductor Manufacturing International Corporation. And the story goes that the company intends to pull out of its membership of the New York Stock Exchange here in Manhattan sometime in June after a 15-year relationship. Now, to be precise, what apparently is going on is that SMIC wants to delist its American depositary receipts. Now, what are those? Think of it as a device for U.S. investors to invest in companies overseas, like SMIC. If they didn't have this device, then they would have to get a pile of dollars together, convert that into yuan. They'd have to call up somebody in China. There'd be a mountain of paperwork. It would take 2 or 3 days for the investment to go through, during which time the exchange rate would have fluctuated and you'd be back to square one. So think of it really as a one-stop shop for U.S. investors to deal with companies overseas. And it's an age-old device. It's nothing new, but it's something that's come to the fore now because this sudden move by SMIC comes, of course, when the Trump administration appears to be distancing U.S. tech companies from China. We've seen that with the Huawei story earlier in the week. Now, SMIC says, look, we're doing this because of low volumes in our company and the very high cost of listing and being involved with the New York Stock Exchange. It says it has nothing to do with the ongoing trade war, but people here on Wall Street, I think you can understand, are a little bit skeptical of that. Now, I spoke to the senior spokesperson for the New York Stock Exchange earlier today, and she reminded me that this is a voluntary delisting, if it goes ahead at all, and that the New York Stock Exchange doesn't comment on the wishes of individual members. John Terrett, CGTN, on the floor of the New York Stock Exchange.